So have you been looking for a trading strategy in which you can increase or improve in your win rate? Trading with the banks or learning to trade with the banks is one of the best way in which you can increase your profitability in the financial markets, be it forex, synthetic indices, stocks, or whatever. So in this video, I'm going to be talking about sharing with you strategies, and I'll be sharing with you live trades that. So we had this very good move on Go, which was caught based on this particular strategy. And you can cash more than 100 pips in one single trade if you understand how to trade with this. So basically, I'm going to be sharing with you some things that you might not easily see on YouTube, right? So you are going to learn this, how to identify the SMCs. We are going to talk on supply and demand, order block extensively. You are going to see how to identify winning order blocks, how to refine entries to increase win rate, not just identifying them. And then I'll share with you most very important aspect, how to manage your trades and your positions, guys. So if you like to watch videos like this, make sure you subscribe to this channel, and then make sure that you watch the video to the end, because this is a whole lot, guys. Make sure that you subscribe to the channel, and see you after the intro. Okay, traders, welcome to my channel.
I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
So this is a deep trade that we took yesterday, and basically we are catching the move already. And if you look at it very well, you see this is our mentorship forum. We're able to do the analysis, and even my students, they were able to analyze themselves. This is one of them who actually posted his profit, who posted his goal, and this is basically what we are looking at, right? So we talked about identifying what our order blocks according to our course content. We talked about learning how to trade with the banks, right? Because this is the major movers of the banks, the institutions. They're the one that move price rapidly. So we also talked about, okay, identifying what are supply and demand zone, or what are order blocks. So supply and demand zones, they are just areas in the market where the banks or the institution comes in to be able to move price so massively. So anywhere you see massive movement in the market, price will always leave about footprints of the banks and the institution. They are the only ones that are able to move price like this. And whenever they move price massively like this, there is always what a leave behind, what we call an order block, right? Price will always tend to pull back to this area, also known as supply and demand zones, where the remaining or the leftover trades that were not taken are going to be taken. So if you're able to identify these zones, you'll be able to catch very good trading setups, right? So basically that's it. Now to identify an order block, an order block, what do? What you simply do is you go to a market situation where you have bullish, very strong bullish momentum candles like this, right? And you identify 1, 2, 3 at least candles that leaves behind imbalances, right? So an imbalance with fair value gap is created when a candlestick body that's so massive gets formed like this. And if you see the candle before and after the massive candle do not actually meet, so their wicks do not meet, meaning there is an imbalance. This space between this candle and this candle here, it leaves behind a fair value gap, right? That's what we call fair value gap or an imbalance, right? If you look at this, you are going to see we have large candles that have candlestick not meeting, right? But if you look at the situation like this, you see we don't have fair value gap here, because the candlestick that is formed before, after, and the candlestick that forms next, their wicks touch and all of that. So when you identify these massive candles, you identify situation where we have fair value gaps, right? I'm just breaking down this trade so that you guys understand how to trade this concept. So when you have identified this candle, what you should do now is you plot out the candlestick that was formed, the weak candle that was formed before the strong move, right? Some people will plot out the opposite colored candle, but you can see identify whatever color candle that was formed before this up move, right? This candle, you can see this is a weak candle as compared to this other candle. So this is known as the order block, right, or the demand. right? Sometimes if you want to identify the massive order flow area, you can extend like this, right? And then you can extend like this to just name it a complete demand area. But if you're identifying just this candlestick that was formed before that move, we call it what? An order block, right? Sometimes we try to minimize so that our risk to reward ratio should be higher. Now you realize that when price goes up like this, comes back, most times you tap to this zone before moving up. But that is not enough, guys. You need to understand some things so that you should be able to increase your win rate. Now you see that before price gets to this zone here, we usually look for what we call liquidity grab. Liquidity grab is just a scenario where price will have to form equal lows or something else in order to clear liquidity or induce trader to think that this is the right time of entering before they get stopped out, and then price actually move to the right spot. The reason for this is because the banks want to move price and clear liquidity, because if they want to execute buy orders here, for instance, right, they need other sellers. So whenever they are buy trades, they are always supposed to be sell trades as well, so that it can give enough liquidity for market to move, right? So the banks will always look for a way to induce people to buy early. They stop them out before they take their next trades. Now I've explained in my previous videos on how to identify liquidities before that, and I've said you should always identify the situation where price will usually pull back, and then when price is pulling back, sometimes it will create build ups, right? The situations are not always the same before it moves down. The reason of creating build up sometimes is in order to create equal lows, and that equal low is for traders who are trading support and resistance to be buying and place their stop loss here. Price will stop them out before reaching this zone, so that there should be enough liquidity to move price up massively. And we have identified some of those scenarios in trading the markets, especially gold, right? So we actually looked at some of those scenarios, but this particular scenario that I'm about to share with you guys is a little bit unique, right? This is some of the scenarios: price create equal lows or create buy side liquidity, come and hit. These are some of the trades that we took in the past weeks, some of the trades that we took in the past week, some of the trades that we took, right? And this is another trade, this is another one, but this one is a little bit unique. So you should always identify, first of all, the order block. When you identify the order block, now you wait for price to come down. When price is coming down, ensure that there is a liquidity grab scenario. Now this is what happened when price came and tapped here. We realized that there was no tangible liquidity grab in this situation. What happened is price came down. For instance, I was a little bit reluctant to take this trade because price just came down straight. I didn't see a tangible liquidity grab that has grabbed before price entered. But guess what happened, guys? When price tapped to this zone here, it started going up. So meaning many people will already be taking their buy trades. Their stop losses will be below this order block. Guess what happened? Now in the 15 minutes time frame, or in a smaller time frame, there was a build up. When price started going up, there was a build up. Price started building up because it has not yet cleared liquidity. So meaning that what we had enough price, price rejected once, twice, thrice. So many people started taking their trades there. Guys, what happened? A very long wick candle make sure that it actually stopped out most traders that entered earlier and their stop loss were here. So this was the liquidity grab scenario that was needed for this move. So this actually happened and liquidity was cleared. All right, and what happened? That is when we were able to take our buy trades. That's why you can see this happened here, and then we moved this like 100 pips, guys. This is a very big move. This is gold, as you can see here, and that's why we were able to record or show you the trade that we were able to make, right? This the trade that we're able to take. Even now, the point I'm trying to make here is to understand that if you learn to identify other blocks, it is not enough. Always try to identify other things, right? Like I'm not talking on everything in this video because this was meant to break down this trade particularly. And also you should understand, it's clear that normally we always have to look at break of structure, right? As price create a high, it comes back, it breaks structure before pulling back to the other block, right? I've made that clear in other videos that I've explained. So now when price pull back, and if price do not create a build up before reaching an order block zone, it can use that order block zone to be the liquidity. So somehow price was looking for a way to clear liquidity before making this up move, and that's exactly what happened here. It cleared liquidity before, and there is a high probability that price is going to move right up to this zone here and even break and move beyond. We know gold have been in an uptrend for a very long time, All right, you might also want to watch my other videos that I've explained on other blogs. I've also made detailed explanations on how to trade them and how to look at these liquidity scenarios with many tangible examples. So you want to watch my other videos as well. So basically now price start moving up. Okay, so remember we also talked in our course outline that we are going to show you how to refine our other blocks, right? We have looked at how we enter, how to identify high probability winning other blocks, and I've showed you guys how to refine our entries. We are refining our entries by trying to increase our win rate, looking at confluence factors, the liquidity graph, and all of that, right? So basically now we want to look at how to manage our trades, right? Okay, now if you look at this our charts, for instance, you see that price is actually pulling back, right? Okay, before we talk about how to manage our trade, I would like to share with you another thing you can add up to this trade as it is moving, right? Because as price moves, sometimes it will not only move in a straight line. Price might not just leave here and then just go like that. Sometimes, in fact most time it does like this, because there are the banks that are involved that have already cleared liquidity, they have reached the other blocks. So most often it will just move like this, but other times price will move, maybe pull back, right? Move, sometimes pull back, and then before it moves get to our final target, right? Now when this happens, you can add up to trades, right? You can add up to these trades as you can see here. Now when it happens, you can drop to smaller time frame, this 15 minutes, right? In the 15 minutes time frame, you can see we have a break of structure based on this, because basically when price came and hit this zone, we had this to be the low. We had what we call change of character, because price was able to break this previous high here, right, creating a new high. Okay, so it's like now price has created another strong move, and now it is pulling back. Using the same knowledge that I've explained, we can identify our other blocks here. So if you look, this is an other block here. Okay, you can look, see this, this very strong bullish candle with this, a lot of imbalance space between it. And if you look at it very well, we have another other block here, we have another other block here, right? Now many traders get confused on sometimes what other block to trade, because there are sometimes you have more than two other blocks. This is another block, all right, and this is another other block here. You see, this is an imbalance that have been created, right? Remember those zones that we have imbalance before, or before the imbalance, right? So now if you look at it, you can see that price has already cleared liquidity. This is equal highs, that lows that have been created. Many traders who bought here, price has cleared liquidity below this zone here, right? So when price clears liquidity, what happens? There is a probability that price can respect this other block here and move up. But now, are you going to be trading this other block or this? Now sometimes we use our Fibonacci retracement tool. If you look at the Fibonacci retracement tool here, it's going to plot their discount zones and premium zones. There are zones that are below the 50% level and above, right? So if you use the tool, this is the tool here, you drag from this low right up to the high there, right? When you drag from this low to that high, it's going to plot out from here. This is the 0.5 level, right? So basically this zone here above is the zone that is above the 0.5 level. From here below, it's below. So the zone below 0.5 level is a higher probability zone. So this other block here is good, but the other block that is at the extreme low is better, right? Because why? This other block here can be used as liquidity, because they know that, remember, they are always looking for way to clear others before entering. So it could be used as liquidity. There are some times in which this will be respected, but if you see a good zone that is below 0.5 level of the Fibonacci retracement tool, then you should be looking, considering. So if price could still pull back to this other block and get rejected, and then we are going to be entering, and then we see continue the move, catching the move right up to this zone here. So that was just a quick one. You can use this in any time frame, in any market, and all of that. Now let's talk about managing our trades. Now, considering that we had our entry here, right? This is our entry that we had here, and price had already given us more than 1:2, right? Because here price moves so massively up here. What I usually do is I'll place two trades, right? When I place two trades, maybe if I'm dividing my risks between let me say I'm risking 2% overall of my total account size, what I do is I divide the risks into two. I risk 1% each. So when the first trade give me 1:2, which is a good move like this, right? I'll usually exit the first trade, and then I lock the other one. So even if I don't lock it, the next trade now is running. I've already had my risks in my account. What do I mean? I've already made some money, in which if price even pulls back and hit my stop loss, and then I will not be in loss. I've already broken even, right? And when price comes now, it moves up. If it happens to move up, I'm going to double win, and I'm not going to be under pressure. Many people are so afraid because that's the only trade they have placed, and when price start reverse, sometimes they close only to realize that price still move up, right? So when it does that, you reduce your pressure. Sometimes I will move my stop loss of the remaining trade to break even after I've closed the first trade, right? This is to ensure that you don't allow a winning trade to turn a loser. In the market, anything can happen. It doesn't matter how good the trading set up present. Price can still leave here, move, break down, just keep going down. So anything can happen. Now, our role as traders is to make sure that we manage our risks properly to ensure that we are able to survive in the long run. That is the goal. These confirmations we are looking for, remember, they are not to make us 100% profitable. They are only to increase our win rate and make us to be able to benefit from those high probability entries so that we can be able to survive in the long run. So basically, that's it, guys. I hope you found the video helpful. Please also support me by hitting on the thumbs up button. Let me know in the comment section below if you enjoyed the video or whatever you want us to make more videos on. And if you are new to this channel, don't forget to subscribe by hitting on the subscribe button and notification bell so that you don't miss out anytime I bring a new video. See you in the next video.